Everyone, and welcome to Other Markets webinar. Today Chris is with me and we will talk about calming your mind during trading. So how to stay calm during trading and which steps you should take in order to stay calm. So before we begin, as always, our standard risk disclaimer explains that online education materials are available by Other Markets Estonia for a global audience, and that trading foreign exchange carries a high level of risk and is not suitable for everyone. If you accept the risk, you will proceed further with us. Other Markets will take no responsibility for information accuracy. This is solely our opinion, and this webinar is for informational and educational purposes only. And today's agenda, my part, will be building up a routine, binaural beats, lowering your risk, and different steps to practice. So first of all, you need to have a routine in order to stay calm. There is no point in staying late at night and then waking up too early to trade. It won't get you anywhere. Believe me, I know I have a lot of friends who trade. Most of them are full-time traders also. And it's very, very demanding if you actually get up very early, let's say for London session, and you still want to trade during Asia session. So it's not, you should not do that. So you should try to get up early, but you need always to have a good night's sleep before you start to trade. The problem arises when you're actually too tired, and especially if you are on a winning streak. If you experience a winning streak, you probably think, yes, I can do this better, I can do this every single time. And for example, if you made 30–40% of profit, then you probably will try to chase it, and it will get you nowhere. So you need to get up early, but you need to have a good night's sleep. In the morning, you should get a very light meal. Your first meal should be light before you start to trade. That is how I do, at least I'm talking from my personal experience. So I drink either a protein shake or cold squeezed juice. I don't eat much. I almost start to analyze markets and trade on my empty stomach. It's just either a protein shake or juice, because I don't want a high carbonate food to actually mingle with my trading. This is connected, because if you didn't have a good night's sleep and you actually woke up early, if you start with a heavy meal in the morning, you will get sleepier, and that's the fact. So you should definitely avoid it. And the thing is that I personally, I experienced a lot of hangovers during my trading career, and the thing that I learned to appreciate, and the thing that I learned to really appreciate a lot is get up early, don't stay up too late, and eat your protein shake or juice. Okay, you need to be light. Okay, if your head is heavy, well, it will probably cause you to rush in a trade. Because you're tired, you will probably chase the market. Even if the market is calm, you will try to enter the market no matter what. And well, you know what is the consequence of that kind of trading. The consequence is usually losing your trades, losing your account, and probably you will not have the chance to recuperate for the same day, because you will be over trading. So three things that should be incorporated in a routine is staying up not late. So you should get up early. So you should never stay up until let's say you can manage to have like 7 or 8 hours sleep. It's really optimum, 7 to 8 hours sleep. Then don't drink too hard before you start to trade, because you will have a hangover. Try to try to practice that your first meal is either a protein shake or juice. For some of you, that may be hard if you have a knack to eat heavy food, but try to practice for a month and you will see that it's much better and your head will feel lighter. And then you start to prepare for the session. Because if you're thirsty, if you're nervous because you didn't have a good sleep, if you're hungry, well, you won't be focused on the session, and you will be in a hurry to eat, to drink, to try to sleep a little bit before you actually start your trade, and that is not good. That will mix with your trading decisions. So prepare for the session only if you are ready for it. And when you're ready, you're not tired, you're not hungry, but you didn't eat heavy food, and you actually woke up like at least 30 minutes before you start to trade. It's very hard to immediately wake up and rush to your PC or your trading platform and open the charts immediately. Give your body time to recuperate from sleeping. You need to relax. You need to prepare mentally for the session. Not just wake up and run to your bedroom or wherever your computer is and start to trade. You should not do that. Okay. Then when you're prepared for the session, you need to scan through charts. You should not allow yourself any rash decisions. That is my primary advice. Because if you rush into a trade, I'm sure that you will not be prepared for trading. And that is the fact. Because the point is rushing into a trade just because you want to make a trade will make you lose. So don't tell me, yes, it doesn't make me lose. I have money, I made money like that. It's not possible in the long run. It will make you lose. And I know that it's a fact because I've been there, guys. I didn't make it up. I've been there, I tried it, and I know how it is. Whenever I try to rush in the market will run away from me. And it's impossible to chase the market. And for all of you who have never heard me saying, I will repeat now, I will repeat again, market is like a shadow. If you try to catch it, you will never catch it. Stay calm, stand still, and let the market come to you. Embrace it. So that is what we need to do. And everything is connected. You see, getting up early, light food, preparing for the session, scanning through the chart, and choosing the dimension, guys. Only then you will choose your dimension. What it is, the dimension? Well, simple as this. We've been teaching you to trade on at least four different ways. Intraday, scalping, intra-week, and scalp swings. Let's say we can include breakouts as a form of trading, mostly scalping. So those are dimensions, right? You need to choose what you want to trade. If you see that market is going nowhere, well, it's time maybe for a break. If you see that market is really moving a lot, try to scalp the market. If you see that market moved during Asia session, but now during London session it's stalling, try to make a positional trade. Or if you know that you will be busy, try to make an intra-week swing. Don't stick blindly to only one dimension. I know some people will say, we cannot scalp, we are not scalpers. Other people will say, we are not swing traders. Guys, you need to adapt. You need to be ready to adapt to every single market condition. Because market is not always volatile. Market is not always calm. Market is not always trending. You need to know which strategy you will use when you choose up your dimension. You need to alternate only successful methods. So you need to have a successful method in scalping. You need to have successful method in intraday trading. You need to have successful method in intra-week swings, and you need to have a good method in breakouts. When you do that, then you choose which one of those you will use. You cannot allow yourself to have only one tool at your disposal. Tools are different, and you should be master of all tools, jack of all trades, but not jack of all trades in a global sense, jack of all trades in trading. So you need to know how to scalp, you need to know how to swing, how to breakout trade, how to counter trend trade, how to intraday trend. You shouldn't be master of all of it, because it will take a lot of time. You have your own strength. Let's say your own strength is intraday positioning. But you can also trade scalps. You can also trade breakouts. Why to stick only to one strategy? That will make you lose. Because your strategy will not work when market is volatile, will not work maybe when market is calm, will not work when it's a range. You need to know a lot, guys. You need to know a lot in trading. Webinars that we have been doing with you together are not just to be said, okay, Chris and Nenad are doing webinars because it's a necessity. It's a necessity, but in other sense. We need to explain, and we always have new people coming in, how to succeed in trading. Having only one method to trade the market is not good, unless you know how to pick days when your method is successful. I know that Camarilla MACD is intraday method, and I know that when I give you the analysis, there will be a huge chance that if you follow it, you will make some money. But if I try to scalp with Cam MACD, it's not possible. I need to alternate the method that I use in conjunction. If I want to make a swing trade, then I need to alternate between time frames on my method. It's still possible, but if I use 4-hour time frame, then it's probably a swing trade. It's not just an intraday trade. So levels will be different, points of confluence will be different on 4-hour probably, but it will not keep me away from trading because I know what to do. If I want to make a breakout trade, I have presented you a lot of methods to actually do a breakout trade. If I want to scalp, I have 5 different methods to scalp, and I know every single of them because I have created it. I can choose this one if that is successful method and that one method gives me the signal. For example, if one method is successful and the other method is successful too, and the first method gives me the signal to scalp, I will use the first method. It doesn't matter because my second method didn't give me a signal, because I know that the first method is also successful. So that is why you need to have different tools. But it's not, it doesn't mean search for a holy grail. No, it's completely different. You don't search for a holy grail if you search for a method that will compensate your first successful method when the day asks for it. Today, for example, you see, nothing is happening. Yesterday we had Euro Swissy drop, and it dropped a lot, really, even more than I expected. Back like a couple of days ago, pound dollar dropped exactly from POC point. Today, let's see. We have dollar CAD set up. Let's see what will happen. You need to be patient. You need to alternate. If you see that nothing is happening, try to scalp few pips here and there, and you will be successful. But don't chase the market. Don't make any nonsense trades if you see that market is not suitable for that particular strategy. So this is important. Have your own tool set of good and proven methods and alternate only successful methods, not unsuccessful, and not just one method. You need to have more tools because market is not always the same. Binaural beats, it's very good. I use it very occasionally. I think that both Chris and I did a webinar on binaural beats. So try to find it. You can also search for different programs and software for binaural beats. You can also find binaural beats on your YouTube. And you need to have headphones, and it's good. Binaural beats produce two different signals between each ear. They use phase difference, and it makes a fluctuating rhythm. Pre-market, you should focus on alpha brainwaves, and during trading, you should focus on beta brainwaves. Why? Because, let's see, alpha brainwaves, those are 7 to 14 hertz, and you will be relaxed yet aware, meditative. Lower frequency waves from binaural beats will make you calm. So if you didn't have a good sleep, maybe you had a bad dream, I don't know, you had a nightmare, whatever messed up with your night sleep, there are binaural beats to make up for it. So before market, alpha brainwaves, 7 to 14 hertz, and you will experience, you will see that it will calm you down. It will definitely lower your heartbeat. It will put you in a state of like that you're meditating. You will definitely be less focused, but it's good because you don't trade. You don't trade when you are under alpha brainwaves, and that will be a bridge between conscious mind and subconscious mind. It means it will not let you fall asleep and miss your, let's say, London breakout trading, but it will make a bridge between being relaxed and entering a trading day from relaxing state. And when you enter a relaxing state, then you will use beta brainwaves, 14 to 32 hertz. That means it will make you focused. So these brainwaves will make you focused. Beta brainwaves are produced when you are wide awake, alert, active, and engaged in mental activity, guys. Because trading is mental activity. This is the brainwave for the fight-flight response, and that is what you need. That is what you need. You want to do breakout trade, you need to have fight-flight response. You need to make a positional trade, you need to be calm, but you also need to react. You want to scalp, again, fight-flight response. Increase concentration and alertness. Improve logic reasoning and critical thinking. It will definitely remove feelings of anxiety, stress, and focused thoughts. Well, I say definitely because it works on me. Try to see how it works on you. Okay? If you're not feeling comfortable with binaural beats, stop it. I'm good with binaural beats. I'm in a good terms with binaural beats. I really don't mind those sounds, and I'm perfectly happy with it. Of course, your pets will not love it. My dog definitely doesn't like binaural beats, but it's normal because they can hear what we cannot hear. But of course, because you will be using headphones, the rest of the crowd will not hear, even your pets. They will not be hearing any binaural beats. So it's just for you. You need to use earphones, headphones. You cannot put it on your speakers because it won't have any effect. Okay? Think about it before you actually try to do that. Now, another step toward your relaxation and toward your successful trading is lower your risk. Okay, your first trade should be definitely lower. Because if you make your first trade over leveraged, let's say that your trading plan tells you to trade with 3% of risk per day. If you put all 3% in the first trade, well then, you won't have the chance to make another trade if you fail. But if your first trade is within the lower risk limit, then the chance is you can make another trade, another few trades, while still being in your risk threshold. So you won't be crossing your risk threshold. Aim for pips, not for the money, because if you aim for the money, chance is that you are over leveraging yourself. So aim for pips. If you say, okay, I will make 10, 15 pips, even when I'm going with a very low leverage and very low pip value, well, it's good. It doesn't matter. Because for every $100 or euros you make, you will be grateful. And that's how successful traders do, step by step. Use compounding. Okay, I will show you how compounding can be effectively used. Trade major sessions only. That is another advice from me, and that is what I will be always repeating. Don't trade during no movement sessions such as Wellington. Go for London, for New York, or if you live away from Europe, try to trade during Asia session, but only when Tokyo opens. Skip Wellington session, then don't trade exactly at midnight. It's pointless. There is no trend. The trend will begin when Tokyo opens. Before that, it's just a range, small trend on very low time frames such as 5 minutes, 1 minute. When you make your goal, step away. So if you made your goal with your trading, step away. Don't overtrade. I'm certain that every single of you guys who are here with us today, definitely at least 99% of you, at least once in their life, you have overtraded. I'm sure about it, at least once. But don't do that. I know you want to make more money. Maybe you're pressed out to make money. But the rule of trading is when you make your goal that is defined in your trading plan, step away. Don't make unnecessary trades. Don't risk the whole profit and your equity for that last trade that it never should be done. If you lose, also step away. Don't revenge. Revenge trading will bring you the doom. It will definitely put you in negative spiral. If you don't know how to control yourself, then lower your risk to 0.2% per trade. That is what you can afford, and that is what you can deal with until you learn to step away even when you lose. This is compounding spreadsheet here, and you can see, let's see that we started with, okay, we have $1,000 account. We want to risk 3%, okay, and watch this. Every single day we are adding to our interest. Only by 10 pips per day. See? At the end of the 6 months, well, it's hard, but why not to try to do that, guys? From 1,000 to 35,000. in 6 months. Try compounding. Try to go for 10 pips per day by using compounding. And whenever you make money, put a check mark here and go do other things. Don't overtrade. Steps to practice before and during trading. These are advice that you can take. Definitely try to close your eyes before you're trading. It will make you calm. Imagine that you are a winner. Human mind is very powerful. Mentally see yourself as a winner. Okay? Try to picture yourself as a winner. Create a positive image in your mind. Now, for this compounding spreadsheet, guys, send an email to me and I will send you the compounding spreadsheet if you're interested. Just send an email and be patient. Relax. Now, create a positive image in your mind and be patient. It means you will not be entering the market until you see a clear signal from any of your successful systems that you have chosen to trade for that particular day. Now, when you kick a trade, relax. You can do that by lowering your risk size. You believe me, it's the most effective method to be totally relaxed when trading. Just lower your risk size and don't be pressed out to make money. Be pressed out to make pips, not money. You do that by lowering your risk. Believe me, I don't need to mention 1,000 times. You won't be nervous. Do you want to get sick? Of course you don't. You want to feel trading as something that is positive, not a negative. People start to see trading as negative just because of their own perception, because of their own mistakes. Trading is the most positive experience. But you need to have a positive picture that you have created yourself. I cannot instill the picture in you if you are not ready to accept what we are talking about. You need to do that yourself, and I am your guide. Don't rush in a position. If you don't see a particular setup, okay, there will be another hour, another session, another day. When you're in the first trade, let the first trade be a low risk trade. Because if you do that, you will have a chance to enter couple more times during the same day, because you won't be using the whole risk. Breathe. Always breathe deeply. Breathing relaxes not just your body, it relaxes your mind too. And it can relax your overall state. Both your muscles, your mind, your attitude. Just try to breathe and focus on that what you are doing. Don't swear, never use bad language, so watch your tongue when you're trading, because swearing can make you rush in a trade, make a revenge trade, and by overtrading, it can make you lose your focus and lose a big portion of your account. Don't drink alcohol during trading because it will cloud your judgment. There is no what if, guys. What if does not exist. Avoid what if thinking at all costs. Creativity has no place in trading. Be objective. No what if. Follow your plan. The plan is your picture, your image instilled on a piece of paper. Follow it. And definitely accept the losses. You need to accept your losses, guys. Let me tell you that losses are not always your fault. Okay? You work hard to make money, but you really lose money fast. Think about it. That means that losses are your fault. If you work hard to earn money, but when you earn money, you lose it fast. That is not good. That means that losses are your fault. But if you lower your risk, and even if you know that you did a good decision, but market was untradeable, know that losses are not your fault. It happens, guys. As a result, good trading strategies experience losses. And even then, they might experience a large string of trading losses. That is why you should have a small risk when you trade. Because it's not always up to you. Retracement, guys, is a natural process of a trend. Losses are no different. Okay? Your account is good if it has retracements. Like this, in an upward trend. So losses are part of trading. But guys, losses should be controlled. Okay? Losses should be controlled. Justin is saying a stop loss might be good for people who get angry. Yes, but I always use stop loss. I'm not angry, but I use stop loss. My stop loss is defined by the risk. If I use 100 pip stop loss, I still can be in 1% of a risk. Also, I can put 20 pip stop loss and still be in 1% of a risk. I will just lower my lot size traded. And yes, account loss is very, very hard to manage. Justin, you're correct, if you get a streak of bad trades. But guys, just don't give up. You know what you need to do, and you need to accept it. When you accept it and when you follow, because I know that you already know what you should do probably, but you need to accept it and stay true. Follow it religiously. Be a fanatic in following your plan, because that will save you from making bad decisions. Train your mind not to get upset. Lose? Okay. You know that it's a control loss. The loss, it was controlled. It was not a random loss. Imagine your spiral of emotions, guys. We talked about spirals, and imagine your spiral of emotion. If you are too eager to trade, it means you're euphoric. Don't do it. Wait until you calm down and you are at optimistic level. Then you start to trade, not when you are euphoric. Stick to what you trade the best. So if you trade the best pound yen, well, stick to it. If you trade the best euro dollar, stick to it. You need to know what is your favorite pair and follow the trend. Because with trend, you can make 2 or 3 good trades per day, and you are off. You don't trade for that day. So this is what I have prepared for you. Chris will continue. If you have any questions, comments, feel free to ask me email and send me an email. And if you need a compounding spreadsheet, just ask. We will talk soon, guys. Cheers. Chris will continue.
Thank you so much, Nenad. Great stuff there. Very important elements. Risk management, definitely. Of course, very key to keeping drawdowns not too large, for instance, and then being able to rebound. Because if our drawdowns are too big, we're going to get even more nervous and we're going to even lose more patience. So that's very important indeed. Let me, first of all, share my screen here. Let me get this going. Alrighty. So if you can quickly confirm that you can hear me and see me, then we can start the this part that I wanted to show you. Alrighty, perfect. Thank you so much. So first of all, Nenad had a lot of great stuff. So I'm gonna try to add some things that he hasn't mentioned. Uh, you know, why a calm mindset? From my point of view, first of all, well, it protects our trading capital. We see typically a very big gap between what our plan is, if we have a plan, and our trading, our actual trading. It creates less fear, and we have more patience, discipline, and consistency. So there are a lot of benefits. In fact, it's just overall gives us more basically stamina to trade and handle those emotional whipsaws without basically getting into a state where we don't want to be. That could be that we're mad, angry, just totally in a way maybe even desperate in a certain degree. When you get into those emotions, things have spiraled out of control too far, and we don't want to get to that stage. We want to avoid being there. If we think that we go into that direction, we want to stop trading. So if we can manage to keep a calm mindset, then typically we're not going to bump it. We're going to bump into these problems a lot less. We're not going to risk too much capital. That's protecting our trading capital and mental capital as well, and all the other benefits that you see here. So that's very important. Now, I wanted to start off a bit differently this time by asking you some questions. Feel free to write along mentally or on paper. Just some things for you to think about. For instance, are you insecure when you've not entered a trade for a long while? So if you have not traded for a serious few hours, few days, whatever is long for you, does that make you kind of annoyed? Do you enter early because you expect the trade to happen soon? You're kind of anticipating what will happen. You have a gut feeling it will, and you just might as well enter right now instead of wait for whatever you are actually expecting. For instance, if I am trading engulfing twins and it looks like an engulfing twin is almost ready, would you enter before the candle closes? For instance, now sometimes you could do that. By the way, in some, as long as you know what you're doing, but mostly it's done incorrectly. Third, do you give better advice when you're not in a trade yourself? Do you notice that when you are in a trade, you kind of like give yourself false hope? For instance, is that something you often see? Do you make decisions which are not based on your trading plan? All right. So feel free to, if you want to share a story that you've encountered with these scenarios, feel free to do so through the chat. All right. But I just want to give you some thoughts about what kind of scenarios all of us face at one point or another. Are you worried about making basically the best choice instead of focusing on the trading plan itself? Do you tend to become greedy or perhaps fearful when looking at price action? You see those candles moving and you think, oh, I want to enter or I should exit, or I should take that profit before the trade is at my exit point. Do you think often about missed opportunities or missed profits and wished that you had done that and that back then? All right, so those are just some typical worries that we now go back in our mind. And the thing is that we have basically, our brain has four states of, presence, basically. We are either very focused, we are either wandering off with our mind, thinking, and not focusing on the current events. We are unconsciously keeping track of changes, because if there's any change that could indicate danger, all right. And fourthly is the attention filter, which basically, we switch attention from, for instance, mind wandering to focused, and from focused to mind wandering. And that comes at a cost, because every time you switch, it takes energy from you. All right. So basically, often enough when we're trading, we're focused, but our mind might wander off as basically some danger we see, and we start thinking about maybe the past experiences, and does that mind wandering in a way, I think, does create some problems, or creates fears in us. Now, mind wandering is nothing wrong with that, by the way. There's a lot of benefits to that. Don't get me wrong. All right, and I'm also not a brain expert either, but this is what I know, that this is what I read, at least, that there are 4 parts of our brain, and mind wandering is a lot of good stuff. It fosters creativity, so it's a great thing to do when you're thinking about your trading after or before, and you're thinking about how you can improve your trading. But when you're trading, focusing on what's actually happening, focusing on how that relates to your trading plan, is more beneficial than letting your mind wander, because especially if we don't have things under control, it's going to create more frustration and anxieties. All right. So with the caveat that mind wandering is good at times, because there's a lot of other benefits that besides the creativity. So let's see. I got some comments here. That's great. All right. So, for instance, yes, enter too soon. Sometimes I guess that goes well, but generally speaking, that's dangerous, right? So yeah, that's happened to Pavlov and Eagles. I'm not sure if I'm saying it correctly. Sorry about that. Let's see. Yes, he's saying, I give the best advice basically when I'm not in the trade, and I want others not to enter. But when I am in the trade, or I want to trade, then that doesn't work out, and that is frustrating indeed, because we kind of see it as a third person kind of third person dimension, and we seem to give a lot better advice in that perspective than when it's for ourselves, because we tend to tie in all kind of emotions somehow. I don't know how exactly, but that's just, I have that too. I see the charts and give advice a lot better. So yeah, that's why for me, following kind of what I say or would say to others is a lot better than, and somehow you kind of tie in too much hope. You hope that things would turn around, etc. So here are some of those, actually some common errors. We tend to overthink, for instance. That's something that we often see. We anticipate something that's not there. We are insecure about how to respond, and we often are attached to a trade or revenge trade. These are the most, I would say, common errors. So if we can treat the market, like set up a plan and execute that plan, look at the market basically as a roadmap, and see it as your challenge to get from A to B and find the quickest route. And you're actually telling a third person how to get there, not yourself, but you're telling your neighbor, for instance, how to get from A to B, but you're the one following that plan. If you look at it that way, and you don't try not to get emotional from when you get beaten off the path a bit because of losses, but just keep that consistency in a way, following your trading plan, keeping your mindset calm, you're going to do a lot better. All right. And this is where basically long-term profitability comes from. Consistency, think about basically any project that you have done in life. Probably consistency was a very important part of that. You're going to see the the value or the importance of doing things very structurally and with a lot of dedication. So that is very important for trading as well, obviously. All right. Now, for trading, that consistency at the heart starts with the trading plan. Now, way back in the day when I started trading, I thought that my trading plan, just kind of remembering it, was okay. Now, the problem with that is that it's often not as clear as you think it is. And yeah, basically, if I just had a kind of some indicators in mind that I wanted to use, but when you start to write things down, you kind of bump into things that are not clear or just could be improved. So when I started to write it down, these kind of issues surfaced, and you're easily going to improve that, and you discover those things as well. So yeah, nothing prepares as writing that down. Really putting your logic to the test by putting it on paper or nowadays computer, phone, and tablets, right? But having a physical printout is always good. All right, because when we're trading, there should be no doubt about how to react, how to respond. We got to know every nut and bolt, right? So now, if we don't write it down, we're not going to learn it. We're not going to improve it as much as we should. Okay, so now most of you hopefully have a trading plan though. So, but if you don't, you definitely want to do that first. Don't underestimate that. It's the core of being consistent. After that, then it's about basically executing that plan as planned, documenting those results, analyzing those results, see what you like, see what you dislike, see what you can improve, then repeat. Then trade again, document, analyze, repeat. Until you get to a point that you're satisfied, you can still make, of course, improvements, but you're going to do that less and less frequently as you go along, or hopefully you will. I mean, until you find a balance and a strategy that you like, that is good for you, matches your psychology, and is showing obviously good results. All right, you want to do that for 30 trades at the very minimum. Otherwise, it doesn't make sense because then you don't have enough results. So yeah, that's what you want. You want to keep track of those results. So another thing, though, this ironically, because it's so systematic in a way, could become a bit boring. All right, and I think I even had that. I mean, at the very start, everything is exciting, right? And you kind of jump from things to things because it's exciting. You want to test all these things, and that's great. There's nothing wrong with testing it. Various stuff, but eventually you want to, stick to a few things and test those better. But by making it basically a routine, right, and more, let's say, basically more repetitive, it is not going to be as exciting. So to keep your motivation, it's always good when you have a successful series or even just one single trade that worked well. Print that out, hang it around you, just to keep you going and keep your motivation on track. Now, that might sound almost impossible for some of you because you're so excited, but that excitement is going to have ups and downs because you're going to have periods where it goes perfect, and then there's periods where it's going to be drawdowns and annoying, and that motivation could wane at least a bit. Very normal. At least I had it. I was most of the time very excited, but obviously I too just you have those swings. All right, so and it will get consistent as your experience grows because you've lived through it. You lived through some drawdowns. You know it's not the end of the world. So that weighs off. That decreases. But at the beginning, you want to have some physical reminders that motivate you as well. for a daily kind of routine, right? Because it's a regular process that's important. Whatever routine you choose, stick to it. Choose something that's doable, of course, and then do that. Because another problem I had basically at start was not having that routine, and putting a lot of time into it, then fading away, then picking it up again, then fading away, having these ups and downs. Really, it's better to pick a routine and stick to that, and put that energy in a evenly distributed kind of system. Now, I'm not saying you could have, if you have some time off on a weekend and you want to do something extra, great. That's not the point, of course. All right. All right. So good habits. We are what we do. From a habit point of view, is an expression. So yes, good habits. If we do that, that is what we will basically work to and aim at. All right. So once we keep that good habit, it'll be easier to keep up the good work, and it will become easier. All right. Let's see. Last but not least, basically adding, removing. Obviously, when you have a trading plan, there are sometimes things you want to test. There's nothing wrong with testing. Open a demo account, try something out. That's fine. But have a specific demo account for that, just for testing, and just try out things. There's nothing wrong with that. All right. We are traders that, typically traders do get easily distracted by all kind of new ideas, tools, setups, because it's exciting, and that's okay. But use something else for that, and test that. But also keep in mind that when we test things, we don't want to add everything. We want to be very strict with what we add. Only add really things that make sense or have additional value. And if you do add something, think about removing something too, so that you keep that balance and you're not kind of overcrowding the charts. You want to keep it lean and efficient. So, that's something you want to keep in mind. Add, investigate if you want to add it. Add occasionally, but then also think about removing. And the end goal, having basically your plan more automated, more subconsciously traded. All right. So we want to have a subconscious approach to that it almost becomes automatic. When you're driving a car for, let's see, 18 years as I am, then driving becomes, if you drive regularly, at least driving becomes automatic. So you want to get your trading to a situation where it does become more and more like that it does become more a automated thing than necessarily you're thinking about what you're doing actually. Don't get me wrong, you always want to analyze, and see what's going on in the market and then react to that and follow your trading plan. But what I mean with thinking is overthinking steps that are documented in your trading plan, or you should decide based on that. And if you start overthinking that, then basically you're second guessing yourself, you're second guessing your plan, and that's going to lead you into a world of trouble. You're going to it's all kind of things. You could regret not taking the trade and revenge trade, or enter too late, or enter too early. All kind of things that kind of make an imbalance after that. So it's not good. So I hope it makes sense what I'm saying. So basically, just to summarize, thinking, analyzing, and trading is good. And thinking before and after trading is good. But overthinking too much during your trading is just going to block you from executing your plan as you want it. So that's something you want to do as a routine. That's something you want to do more automated than overthinking every step. Let's say, for instance, if we would really focus on walking, taking every single step, it would not be good, because we would really get tired from that, right? We just let that over. We kind of like delegate that to our automatic kind of systems in our brain in a way that do that automatically. We don't have to think about that. So to a certain degree, right, that's where we want to push our trading to. All right. Very important when setting up your plan is, if you feel comfortable with it, is there a match between you, yourself, and your plan? And if you're breaking the rules, then that's a warning signal that there could be something of a mismatch. My best advice that I could give you for keeping that calm mindset, I thought Nenad made a great point with regarding the risk, which I don't have here, but risk, yes, definitely. Don't get attached to a trade and try to think of a trade from a third person point of view, or try to see it as I said, advising a friend or a trader friend. Don't get attached to it. I think that's one of the key problems, is where do you still keep the trade and where do you actually exit? And that's something I'll still share in a second. You want to think of probabilistic mindset. You want to keep things in perspective, that one trade is just one trade, even a series of trades is just that. Think of in terms of think with a probabilistic mindset. And yeah, I already talked about the thinking part actually. Very important. Accept the reality that we do not control price. So regarding the patience, how much patience should you have, and how much attachment should you have? So basically, I am patient at the beginning. I want to give it some time. The thing is that some traders exit very, very quickly, and for various reasons, maybe it was not actually a setup they should have taken. Maybe it wasn't a good setup according to their plan, but somehow they see something in the chart that makes them scared or fearful. So the trade is cut, it's closed before it even had a chance. So that's not good. You want to open a trade where you can stick to, and you want to give it a chance. But eventually there will be new information coming in. There will be new candles, new candlestick patterns, new chart patterns, and you don't want to be oblivious to that either. I don't want to do that. I do want to incorporate that. Some people don't want to. They have set and forget strategies, and if that's for you, that's great. I do like to do trade management. So for me, I am going to incorporate basically that information, and I will move to reduce the risk after a decent amount of time. Then, once I've reduced the risk or moved it to break even, I want to give it space again, because I want to have a chance for it to hit the target or make a bigger run. And once I've done that, then as soon as it gets closer to my take profit or it's showing good momentum, I again want to tighten up my approach and use a trail or maybe even a market exit to lock in that profit. All right, so if you were to do it schematically, I would say patience, no patience. Patience, no patience. Right? Sorry, that's badly drawn, but that's my rhythm that I use for doing that. The concepts to know when to be patient, less patient. I use time factor, candles, patterns, supportive resistance. I can't go into that. There will be another hour webinar. So I would, advise to go to youtube.com, search for Admiral Markets, basically take a look there. And sorry about that. I see the screen was frozen. So we were here basically, right? Sorry for that. So patience at start, reduce the risk, give space, tighten trail, use time factor, use candles, use patterns, support resistance. That's what I'm doing basically for knowing when I should give up on the trade or continue. And for me, that's always a tight balance. It's always a struggle in a way for each trade. Yes, I have these concepts, but I'm always balancing those uh, because I don't want to quit too soon, but I don't want to stay in too long. That is a tightrope to walk on. It's not easy. South Africa is easier from that perspective, but I think it gives a lot of benefits. And if we have that mindset, I do think that we can at least avoid, for instance, hanging on to the trade way, way, way too long because we just hope that the trade will go back our way, and we kind of organize evidence or find evidence that supports that. All right. So yeah, know that. Try to find that balance. But anyhow, again, go to Admiral Markets YouTube channel and look for time factor, and you'll find more information on that, or trade management as well. The screenshots that were frozen quickly here. Once again, the problems that I think are detachment or attachment actually of the trade. Sorry, you need a probabilistic, or that's not a problem. That's a solution. Sorry, detachment of the trade, probabilistic mindset, trade on autopilot. And I think this one too, you want to know yourself and whether it matches with knowing your plan. And if there are any rules that are broken, that is a warning signal. All right. Any questions at this point? All right, let me quickly show you. If you have any questions, let me know. In the meantime, let me show you where you can find more webinars. Go to admiralmarkets.com, click on education, click on webinars. And next week, we got basically Nenad, of course, with his weekly FX recap. I'm going to take a look at Forex market trading on Tuesday, Wednesday. And I want to use the Keltner. I'm going to focus on the Keltner. I want to basically focus on a simple trading method and discuss that in these two sessions. Something that is smooth and simple. Sometimes my trading ideas can get complicated using various concepts together. So I want to simplify things. That's what we're going to talk about on Tuesday, Wednesday. And also on Wednesday, maybe how to handle August trading. Because August, typically movements are a bit less. So how can you handle that? And then Wednesday, we're going to take a look at new Heikinashi trading systems and understanding the story behind wave analysis. That's only me this time. All right. One time, we're going to take a look at wave analysis, complex corrections, and strong momentum. All right. So regarding the charts, for instance, here, no questions so far. Let me just show you one example regarding how you can find a balance. Let's see. All right. So for instance, here in this breakout or this breakout, if I am taking that trade and I'm using time factor, for instance, right? All of these spots right here, all of these bars here are showing lower lows. That's when I have patience, right? So I would run out of patience, for instance, here, if the candle does not get follow through and price goes sideways too long, 5 to 6 candles, then I'm out. But it does show good follow through. 5 to 6 candles happen somewhere here. So that means for me that at this point there's a correction and I would exit that trade for or move the stop loss, one of the two. Not always, but if sometimes I still give it another try, especially if there's a good momentum. For instance, if there's a big momentum here and there are strong candles, there's a very high likelihood that this bottom will be broken, and I would not exit, or in many cases, I would not exit in this correction, anticipating a follow through to the downside. So that happened. Now, if it gets further away from that, then there's less momentum. Then I would be more cautious. I might exit here for a smaller profit, maybe instead of hanging in for the next move down. And here, if another breakout trade, you can always take a breakout trade again. upon the next break, the next trend line, for instance, right? And right there. So here too, we got good continuation, and we see basically price making sideways move, that indicating basically the correction. So yes, here I would have patience. I would have patience for a couple of candles to prove itself. And if it does, great. I was right in doing that. And if it doesn't prove itself soon enough, then I'm going to be more demanding. I'm going to be more strict, and I want to limit my risk. But as soon as it goes my way, right, then great. Then also I'm going to move my risk, move it to break even, and or reduce the risk at least, right? As soon as it has a decent profit, then again I might trail stop. I might, if I see smaller candles like that, using candle highs, for instance, could be great to exit, or the time factor, right? Because you want to lock in that profit. You don't want to give it away. So those are methods that I use, just very briefly here, that I use for trying to find a balance and sticking to the trade and abandoning it when trade managing it discretionarily. All right, so I'm sure that for every one of you, for every one of us, it's a continuous learning curve, no matter how long you've traded. And above all, especially if you start out, and I would say even after a few years, it's one of the things that requires consistent working on to improve that and get better and better into how we indeed manage with our emotions and deal with that. So this is something that we can talk many times over and over again from different angles, because I think it's always very useful, always very beneficial for us to talk about this stuff. So if you have any things you want to share with us regarding trading psychology, if you have any ideas or questions that we can address maybe in a future webinar, feel free to write us and let us know at admiralmarkets.com. Just use, for instance, here, contact us, or write us an email if you have our email address, and we can discuss that and maybe set up a new webinar and discuss your questions, etc. All right. Alrighty, folks. So with that said, yes, it is recorded, and you can do so. You can look at the recording by going to youtube.com, click on Admiral Markets in search. You'll find Admiral Markets channel, and you'll see all the most newest videos. And you can go to playlists, for instance, here, and you'll find all the playlists that are gathering the webinars of the same topic. So that's how you can find that. Or just follow us on Twitter, and you will be able to pick up the tweet that we send out when the recording is ready and available. All right. So thanks again for your time. Wish you all great trading. Talk to you soon. Cheers.